Hello, YouTubers, friends, compatriots, bootlickers, shills, destlay, stars, peasants, vassals. I'm a useful idiot, and today I want to talk about the big lie about the housing recovery. And I actually did this video quite some time ago, but it wasn't very popular, so I'm going to rebrand it and remarket it, kind of like the government does. Instead of changing their policies, they just hire a new PR firm. So I'm just going to rebrand and remarket that same video with this catchy new title that fits in with my Big Lie series, my 5,267 part series about big lies that the government tells. And so now let's talk about the big lie in the housing recovery. And there's a whole bunch of factors that are involved here, but one of the main ones is one I talked about in my previous videos about Wall Street marketing a brand new, dangerous new security. And that is the fact that institutional investors have moved into the housing market and basically reconstituted, reinflated the asset bubble, at least to a certain degree, and it's mostly in the most distressed markets in the country. And so that is the main impetus for this supposed housing recovery. So let's get into those numbers. The industry itself, the Wall Street industry, hedge funds and banks, have bought up 200,000 homes. So that's a pretty sizable chunk when you figure that about 5 million homes were foreclosed on during the collapse. The fact that 200,000 of them have been bought up by the Wall Street and institutional investors is pretty significant. In fact, one company, Blackstone, the Blackstone Group, bought 1,400 homes in Atlanta in one day. And of course, these institutional investors pay cash direct to the banks. And as it turns out, as we discovered from my last video, they've been buying houses at least 40 to 50% below market value. So that's one of the advantages. And then they reap the rewards when the prices are reinflated by the fact that they are buying these houses. And in fact, they made $88 billion in the last year from their real estate holdings, banks and institutional investors. And that's just from reinflating their own market, which, as I pointed out before, is rather ironic that these same banks that were at the center of the economic collapse and economic exploitation are now reaping the rewards of that collapse all over again. Because, for example, Blackstone Group, one of the biggest, or the biggest equity fund in the world, and they have institutional owners, and those owners are the very same banks that caused this collapse, and then were part of the foreclosure waves. Morgan Stanley, Citigroup, Deutsche Bank, UBS, Bank of America, Goldman Sachs, and JP Morgan. All the same banks that foreclosed on 5 million homes, all the same banks now getting involved in this new industry. And Blackstone Group, for example, also owns or co-owns Hilton Hotels, Southern Cross Healthcare, the Weather Channel, SeaWorld, Michael's Stores, Orangina, and they manage more than $200 billion in assets. So they're strictly in this for the investment, and they are going to have low maintenance costs for these properties for sure, and they are very serious. Blackstone alone spent $7.5 billion for 40,000 homes in the last year or two, and that's $100 million a week since a year ago. $100 million a week they are spending on properties and then turning them into rentals, and then turning around and securitizing them, as I brought up in my previous video. And how do we know that the institutional investors are responsible for this big lie about the housing recovery? Because home ownership is at an all-time low, and yet housing prices have gone up 10 to 20% just in the last year and a half. Coincidentally, the same time that Blackstone spent $7.5 billion for 40,000 homes, and institutional investors have bought up 200,000 homes. That's the same time period in which prices have gone up 10 to 20%. So it's clear that they are a market maker, and home ownership is at an all-time low in spite of record low rates. And one real estate agent said that it was almost, quote, almost like they planned this, unquote. Well, I have news for you. It's more than almost like they planned this. It's like they planned this. And like I pointed out, $88 billion in profits in their real estate holdings just last year. So what are the other big points about the big lie in the housing recovery? Well, that's the fact that 1 out of 10 homes that are selling in distressed markets in California and Phoenix are foreign buyers, a lot of Chinese buyers. Then we have institutional buyers, like I pointed out, that have bought up 200,000 homes, and these institutional investors are going to go to Europe, notably Spain, and reinflate the asset bubbles there, buying up distressed properties and then exploiting the middle class that were forced out of their homes. So we have the institutional investors, we have the foreign buyers. Those are two aspects of the big lie about the housing recovery. And then we have banks bailing on the mortgage industry. And as we've noted for the last year, a lot of the big banks are shutting down their mortgage departments. They're not servicing mortgages. It's better for them to get involved in just selling securities. And it's interesting that we have rental securities being created when the Federal Reserve is still buying mortgage-backed securities. How can they be creating more dangerous derivatives when we're still dealing with the last batch they created? And that's another one of my points. We have the Fed Federal Reserve buying mortgage-backed securities. So that's another reason why we know the housing recovery is a big lie, because not only is the Fed creating the money for these hedge funds and Wall Street players and institutional investors to go out and buy great swaths of real estate, but the Fed is also propping up the market for the securities that are created from that market that they've created for mortgage-backed securities and now rental-backed securities. And as I pointed out, home ownership is at an all-time low. So this is just another transfer of wealth to Wall Street. All that wealth that was held by middle class is now transferred to hedge funds, and Wall Street will now exploit those very same people that were forced out of their homes, like I brought up earlier. And then, of course, we have Fannie and Freddie. The fact that almost over 90% of all the mortgages created in this country now are serviced through Fannie and Freddie, and government backing it up. So once again, we have the government subsidy of the government tent, the government propping up this failing market. Deflationary forces want real estate to go back down, and the deflation of this asset bubble is one of the greatest fears, certainly of the banking industry and the entire economy. And we saw what happened before when the economy was hinged on a real estate bubble and it collapsed, and now we have a real estate bubble being reblown in the United States, and then potentially collapsing real estate bubbles in places like China, places like India, places like Canada, places like Australia, places that have thus far escaped the real estate collapse we've seen in the Eurozone in the United States. And so just like all the other big lies, this housing recovery is a big lie, and we potentially are going to pay the price down the road when deflationary forces push the real estate prices back down again. And then not only are we going to have mortgage-backed securities to deal with, and all the mortgage-backed securities that the banks and institutional investors generate, but all the mortgage-backed securities that the Federal Reserve has bought, and then these new branch of rental-backed securities, and then the domino effect with all the credit default swaps. So this big lie about the housing recovery has distinct and very powerful dangers that are readily evident. I'm a useful idiot. Don't you be one too.